Hello and welcome. You're watching Markets at Money Control. Here we wrap up the day's trading action for you. I'm Rakshita Madan and joining me is Santosh Nair, editor Money Control. Hi Santosh.
Hi Rakshita.
Last day of the trading week, but no cheer on the markets. We are seeing 3 days of straight close, flat close, sorry, and bulls are pretty much being sidelined here.
Well, yes, I think the global news flow is getting a bit negative, and that's weighing on sentiment. You had tensions in North Korea, which kind of put investors on the back foot yesterday, and today you had the tube explosion in London. So that is kind of holding the bulls back. The Nifty struggling to cross the 10,100 mark. Sentiment has not yet turned negative, but clearly the overall mood, I think, is cautious for the time being. Market breadth fairly negative today. Around 1,400 stocks fell and around 1,000 stocks rose. And the big outperformer of the day was clearly the IT sector. But for that, almost all other sectors ended in the negative. Asian markets too were mixed today, and European markets are trading slightly under pressure as we speak.
So like you mentioned, IT was the only outperforming sector, and that was the only sector in the green. What is happening there?
So the strength in IT shares is not really born out of any strong conviction in the sector. It looks like investors are getting a bit jittery because of the overall negative mood in global markets. So they're trying to probably curtail losses and get into sectors where they feel that the downtrend may not be very sharp, even if sentiment continues to worsen from here. And now remember, IT sector has been underperforming for a while now, so it's not overowned, unlike many of the other sectors which are heavily overowned. So the chances of a steep correction in the IT sector looks less at this point, which is one reason why investors are getting into that sector. Yesterday pharma shares had a good run, but today again they failed to build on the momentum. So it's pretty much a trendless market. 3 straight days of flat close. Nifty struggling to stay about 10,100. That's pretty much the story here.
A look at the top gainers and losers of the day.
ONGC was the top gainer among Nifty stocks, gaining about 4%. It's a good thing for ONGC if crude prices stay in the $45 per barrel range to about $60 per barrel. Above $60 means ONGC will have to bear a portion of the subsidy. So that's not very good for the company. Right now things seem to be going just about perfectly. That's why you're seeing the stock steadily climb. The other big gainers today, Bajaj Auto was up about 3.2%. Infosys gained close to about 2%. Among the prominent losers, you had Dr. Reddy, which was down by 2%. IndusInd Bank down by a little over 1%, Tata Power and BHEL were the other big losers. Now BHEL, yesterday there was a lot of excitement after the company said it had won an order for bullet train, but now it seems like it's not going to be a major order given the overall scheme of things and in the context of its the size of BHEL's revenue. So that led to a bit of a sell-off in the stock today. Most brokerages have not really upgraded the stock. Reliance Communication, a big loser, down 5%. Now Aircel, the company with which Reliance Communications was looking to merge, that's filed for bankruptcy. So bad news for Reliance Communication there. Already a couple of days back, Ericsson's India arm has dragged Reliance Communication to the NCLT over unpaid dues of about 1,154 crores. Mid caps too under pressure today. So broadly, the mood is cautious. It's not negative in a big way because you have strong liquidity flows, mutual funds still heavy buyers. But the question is, can liquidity flows alone support the market, especially if you have all the other indicators turning negative?
Right. Thanks a lot for joining me, Santosh. With that, it's a wrap on this edition of Markets at Money Control. For more news, views and updates, stay logged on to moneycontrol.com.